Good morning, everybody. Thanks for joining us. We'll get started in just a minute. All right. Good morning, everybody. Somebody drop in the chat there and just let me know if audio sounds good. Good morning. Good morning, Daniel. Daniel F. Myers. Right here in Fort Myers. Sounds good. Okay, great. Thanks. Okay. We'll go ahead and roll this morning. Great, thanks. All right, so thanks everybody for joining us. Obviously, this is Michael coming to you from Game Edge on Thursday, December 4th with our pre-market prep session. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend. And then we'll go over some individual equities at the end. If anybody wants to go over individual tickers, you can go ahead and drop those in the chat, and I'll get to those. So starting with our market trend model, I posted this morning a link to our education article about our market trend model. If you want to review that, it's based on the tick index. This is just buying versus selling in the overall market. Quick orientation is the bolded white line is your intraday instantaneous cumulative tick, or CT, that we like to refer to. Again, this is just indicating who is winning the battle of buying versus selling in the overall market. If we're from lower left to upper right and continuing in an ascending positive slope pattern, then there's more buying versus selling. Able to review this pretty quickly up here in this top pane. This is our breadth indicator, so new highs versus new lows. You can see yesterday new highs were significantly outpacing new lows, basically a 45-degree angle to the upside on new highs, and new lows were just stagnant and just continued sideways. So really 3 to 4 or 5 days of continuous buying or continuous new highs outpacing new lows in the overall market. Obviously indicating that we should be on the long side of the market. We had a trigger day back past previous before Thanksgiving. So our market trend model turned on, and then our mechanical portfolio gate, which is our trigger for us to start entering long positions, also turned on. So we were entering those positions in both our P-trans to PX as well as our wheel strategy. And then looking at the filtered cumulative tick indicator, we did have one day below the zero line, but really it was just a consolidation day within the SPX. You see the bolded white CT did drop below those shorter term momentum moving averages slightly, but then we recovered those fairly quickly. The colored ribbon here, which we like to look for a longer look back period. This just gives us a longer trend in the overall market. The red is above cyan now. We called a ribbon flip back here on the 28th. So again, if you were waiting for indications to get long the market, that would have been that overall indication. And we continue to a positive slope to the upside. So we'll stay with this long until we get a signal turns off via our cumulative tick here. If you're a shorter term trader and this white bolded line starts dropping below the moving averages, then obviously you could reduce some exposure. And then if we drop below the colored ribbon, we'd obviously be flat and then possibly looking to short the overall market. But as of now, the bullish side and the long side continues to be indicated via our market trend model. All right, let's move on. The SPX options complex, again, largest, most notional value. This is what we look at to understand overall positioning of market participants. Again, this is our SPXA. We separate that from the SPXP. SPXA is your institutions and larger market participants. This is what we call our tanker. This basically steers the direction of the overall market on a longer time frame, kind of a 40,000 foot view. So with the December expiry, we are call dominated still, so any pullback should be supportive. Speculation to the upside is not as much as we would anticipate or like to see for a significant move. You'd like to see this completely green for the December expiry, and then obviously larger net delta bars for a significant move to the upside. And you see our transition level there all the way up towards 6,900. So as of now, 6,900 might be that first stopping or stalling point, and then we'd like to see all of this. These are in the money puts overhead. Again, they're very low exposure on the in the money puts. Thanks, Tom. Yeah, we'll talk about the web app at the end. So, those to the upside, you'd like to see be these either removed via expiry or overcome by out of the money speculation. So that would give us an opportunity for price to move significantly to the upside. But 68.50 spot price, any pullback again should be supportive. 6,800 is that larger sensitivity level of speculation to the downside. That again, any pullback into that area should be supportive as we are call dominated. All right, moving on the SPXP. Again, all expiries turned on. We're call dominated above and below spot price. As you can see, you see our charm levels is where our gamma levels. We can also turn the bars on for the gamma if you wish. We just have it numerical at this time. Transition area here, we're right at the top of transition this morning with the implied open at 68.50. We've really been chopping between 6,800 and 68.50. And coincidentally, that just matches our transition zone. And as we always say, if we're within the transition zone, the price action can be very choppy. If we're above transition, it's bullish. Below transition, it's bearish. So very simple 3 states there that we like to cover here at Gamma Edge. And then to the upside, 6,900 would be that highest sensitivity out of the money speculation level that coincidentally matches our COTMC level. That's proprietary to Gamma Edge, but that's a calculation we have where a significant portion of out of the money puts become in the money, obviously, and that's historically an area where we can see some monetization and some stalling without new speculation to the upside. So again, if we're above the transition level, 6,900 would be our first target to the upside. All right, let's go ahead and move on the SPXP GEX ratio. This is like a put call ratio, but we add a time component, which is gamma. You can see that we have recovered fairly significantly from the large move to the downside with those bursts to the upside. Again, this matches your short-dated call speculation, short-dated call gamma versus short-dated put gamma. So if you're above 1, that indicates that the short-dated call gamma is larger than the short-dated put gamma. So that would indicate that the bears and out-of-the-money speculators are in control of the overall structure. And as we're seeing right now, we had 2 kind of doji days, sideways days, and the GEX ratio was maintained. And we're still in a positive slope to the upside, even though we're flattening out some. So again, this is still indicating bullish and out of the money speculation, but possible consolidation and choppiness within that 6,800 to 6,850 as of now. All right, let's move on to the delta balance. Again, this is just separating the left-hand plane and the right-hand plane speculation. Left-hand plane is below spot price, so that's in the money calls and out of the money puts, and that is indicated here, red dotted line. And then the right-hand plane, as we refer to as the green dotted line, and that would be above spot price. That's the out of the money speculation, call speculation, as well as in the money puts. So I've talked about we have out of the money speculation to the upside, but still a little bit in money puts overhead on the SPXA. So again, spot price appreciation may be slow there to the upside. And then our delta balance, the blue dotted line, is the aggregate. Again, that's it pegged at +1. So again, call speculation, call speculators are in control of the overall structure in the market. So we're not anticipating any large drawdowns. Pullback should be supportive. As we saw yesterday, pullback to 6,800, very supportive in the overall call dominated structure. And we got a nice bounce off of that. Great opportunity for an intraday trade as well as a possible swing trade if you already did not have an entry. And that's what we'll continue to look for, is pullbacks to key gamma delta levels that are supportive within the overall option structure, as well as our market trend model to get involved in the overall market. And then on out in time, further expiries, we see the right-hand plane continue to improve. We see the left-hand plane drop a little bit slightly. Again, this could be through expiry or monetization below us. And then the delta balance looks pegged at 1 on out until 6.9. So that would be the first expiry that we'd start looking for slight weakness within the overall structure if this positioning is maintained. But that's 5 days away. So obviously that could change between then and now. And that's why we monitor this day over day to watch the snapshots to see if this continues to look like it's going to weaken either through monetization or expiry, or does this continue to improve and we see the delta balance drive back towards +1. All right, let's move on to the SPXP net stack command. This is a high sensitivity level. This was an invaluable tool yesterday as we had significant in the money calls below us. At key sensitivity levels, we were watching for supportive type action. So again, we'll have those at 67.40 in the money calls. Again, that's below that 6,800 strike, but we noticed the net charm at 6,800 out of the money puts. Those will continue to be supportive. But the key area overhead for us today is out of the money calls, not a significant amount of out of the money call speculation on up towards 68, 65, as I discussed. So a significant move to the upside may be dampened unless we see intraday out of the money call speculation via our vol M command or vol D command. Again, that would be indicating that market participants are opening strikes much higher. If you review our past 2 days, we fairly had a flat to slightly upsloping call centroid. So again, that was indicating a grinding type action, and most likely some flattening. You'd move up and we'd see some overall stalling, just not that significant quick move to the upside. And then now we're looking at the charm level overhead at 69.40. Those are out of the money calls. Those will significantly weigh on us. If we're below 69.40, obviously that's a large strike above us. And then we see Gamma 69.40 and Vanna at 69.40. Key takeaway on the Vanna is it is supportive of a tailwind if we see a drop in volatility, as well as out of the money calls being opened, even though the strike is significantly above us. All right, moving on to the SPXP 0DT for today. I outlaid the structure on X, so make sure you check that post. We're call dominated, so again, supportive on any pullbacks. 6,800 to 6,850 is our drunken sailor range. All that means is it's a low exposure area. You'll notice the net OI is in the hundreds. So we can be driven, spot price can be driven by intraday call versus put speculation very easily, as compared to the upside where we have the net OI is in the thousands. So if we start overcoming these levels overhead, we'll start adding positive deltas at a very nice clip. And you see those net delta bars here, as well as the numerical value of those strikes, as well as the net OI. So again, this continues as we move to the upside to add positive delta to our book, negative delta to the dealer's book, and they have to buy to hedge back to zero or hedge back to flat. So again, that just creates this continuous supportive type buying to the upside. And then to the downside, we obviously see the single digit, or sorry, in the hundreds to the downside. And we see that net delta is still green. So again, these will continue to be supportive, even though we have out of the money, some out of the money put speculation below us, but these again are out of the money. So the in the money calls are driving the overall bust here. Positive delta, supportive for moves to the downside. Now, if we see this start to degrade and we see these change to red, then that means the in the money calls are leaving the overall complex via expiry or becoming out of the money, as we talk about moneyness matters, or we see a significant amount of out of the money put speculation to the downside. Obviously, absolutely not seeing that at all. So we'd anticipate the bottom of DS to be supportive, 6,800, maybe a good area to get involved, as well as the transition levels are always in key levels and important for pullbacks to gauge the bullish versus bearish sentiment and have an opportunity to get involved long in the overall market if you're not at this time. And that's exactly what we saw yesterday, pull back to key level below us. All right, before we move on to our trading view chart, as always, join us at gameedge.us newsletter. Put your email in here. You'll be delivered to Beyond the Bell newsletter on the weekend. Covers our philosophy, theories, all the tools we use here at GameEdge. So let's go ahead and move on to our trading view chart for this morning. Obviously, it looks like we had some news, so we're having a significant move to the upside pre-market off of that 68.50 level and the top of DS. If we stay above DS as well as the 0DT transition levels, we continue to look for a move to the upside, grinding type action most likely, unless we see a large out of the money call speculation coming in via our vol M, or our vol D command. Yesterday, pullback to the 6,800 level pullback over here to the 6,800 level was a very good opportunity to get involved. Key level below us, it was the bottom of our DS range also. We talked about that being able to get involved in the overall market and again, a nice bounce back to the upside. It was a call dominated structure. So again, we look for all of that to continue to be supportive. So at the open, we'll see how we handle this top of drunken sailor range at 68.65, and we'll see if we continue to see out of the money call speculation. Again, 6,900 would be that target to the upside if we have speculation come into the overall market. All right, let's go ahead and move on to individual equities. I see we have one person posted GLD. We'll go ahead and look at that. And if anybody else wants to cover any other individual equities, we'd be happy to cover them. Or if anybody wants to talk about the market or our overall thesis or tools that we're looking at. So GLD, quick overview, all expiries turned on via our web app. I'll check out BABA too. Call dominated above and below spot price. So spot price is 387. You're right at the top of the full expiry transition level. So key area to get above. Speculation to the upside is 390. We see PGEX at 400 and COI at 400. So that'd be that local peak. You see a significant amount of charm overhead at 390 as well as delta. So this could be obviously out of the money calls here. So this charm is going to continue to grow if you're below that. So that would be that first stopping point or headwind overhead that I would look for. If you get above these levels and continue to add, I'd be looking for 395 and then 400 to the upside. Let's look at this week's expiry. Obviously, it's only 1 day away. Call dominated, 395 to the upside. You see significant charm there, roughly around 390. So again, that could be that first headwind if we see a move to the upside. And then staying above transition is going to be key. Any pullback down towards 382, 383, I think should be supportive. After this Friday, we have Monday. Obviously, this is Monday, Wednesday, Friday expiries. Monday, call dominated. You see the overall structure drop fairly significantly. So PGX drops as well as the overall transition level. So that's not necessarily bullish. Transition level still stays under that 400 level. So you see PGX drops. So next week looks a little bit weaker on GLD just through the overall structure. So hopefully that helps. Let's look at BABA. Again, thanks everybody for joining us. We appreciate the interaction. Try to go live with a midday recap today, hopefully, depending on what the team is able to do today. So call dominated above below spot price. You're right at the bottom of transition, so need to get above transition. PGX 165 for all expiries, 200 to COI. That's pretty far above. You see the charm is going to be an overhead issue for a move up. Let's look at this expiry. So you see net delta overhead. This is actually red, so that's indicating that the put OI, these obviously out of the money calls are overhead, in the money puts overhead, going to be difficult for a significant move up there. 165 would be that area to try to get above, but you're also at the bottom of transition. So you have transition overhead, in the money puts, charm, and delta. So going to be a difficult headwind, as well as PGX is all the way up at 165. So I'm not seeing BABA as very bullish, obviously into Friday. Next week, call dominated. This changes, so those puts get removed. So we actually have speculation to the upside there. So 165 would be next week, would be that target I'd be looking for. So hopefully that helps. Yeah, no problem, Butch. Thank you. All right, anybody else want to discuss anything else? Any individual tickers, market trend model, anything else, overall view of the markets? So you see there, we're interacting with the top of DS already. So we had that push up. Yeah, absolutely. Had that push up, and now we're seeing some stalling right at the top of DS. So that's why we outline these key sensitivity levels. If we fail DS, UPS, yeah, we can look at that. If we fail DS, we probably could see a move back down towards 68.50. So that's where I'd be watching for this morning. Yep, UPS. Tesla, oh yes, always Tesla. I love Tesla. All right, call dominate on UPS. Looks pretty decent. 100. UPS expected move 2 points, 2.26%. So that gives you the 100 level as the target to the upside. So not a large move expected. This expiry, PGX 100, you're slightly above transition, so that's bullish. After this expiry, PGX stays at 100. You do see COI move up to 104. 4 points expected move into next Friday. So that would be, I mean, Tesla looks good, or sorry, UPS looks good. 100 be that first stalling area to the upside, and then 104 after that. So hopefully that helps. Tesla, call dominated above below spot price. We're right at PGX at 450. I think I posted this morning. Scott Redler had posted a chart on Tesla, had a nice move from key levels below that were supportive that we were watching. Mainly transition as well as in the money calls. So we're call dominated. 450 looks like that sticking point. 460, if we get above 450, you see significant amount of charm due to the out of the money calls to the upside. I'm just going to go ahead and look at next week's expiry. We see 480 PGX and COI move to the upside. So bullish structure still looks good in Tesla. Speculation to the upside looks good. So I would continue to stick with it if you're long. Again, not financial advice, but Tesla has continued to look strong even on the pullback in the overall 5% pullback in the overall market there. So, and we have speculation to the upside. So CRM, call dominated. 250 is your PGX level. You see the charm overhead because out of the money calls. 240 would be a pullback area that should be supportive. Transition area. Let's look at next Friday. 250. So PGX actually moves up slightly. Transition actually drops, which is bullish. So you have call speculation. Not a lot of call speculation above 250 though for next Friday. After next Friday, we see peak X and COI actually move up, so speculation does increase, but 240 to 250 looks like a sticking point to the upside. So if you're long and we move up towards 250, that'd be an area I'd look for some overall profit taking and stalling. So, all right, sounds good. All right, again, thanks everybody for joining us. Like and subscribe on X and YouTube. You'll be notified when we go live. UNH, yeah, we'll take a look at that one. With any live content. So call dominated, 350 to the upside. You're above a significant transition. Absolutely. Yeah, absolutely. UNH, no problem. 350. That'd be an area I'd look for stalling. If you're long, looking to the upside, pullback should be supportive at transition, as well as in the money calls below you around 330. Let's look at next week's expiry. 340. So transition drops, peak XCY actually drops. So not a significant amount of speculation to the upside into next Friday. You actually see it drop. Let's look at the next expiry. 350 still being maintained, and 400. So still looks fairly good. Let's pick both expiries. 350 to the upside, 400 COI, transition below you. So supportive on pullbacks. So that'd be the upside area I'd be looking for, 350. So. All right, thanks everybody for joining us. I'm going to go ahead and end it there. Again, like and subscribe on X and YouTube. You'll be notified when we go live. Share our content. Interact with us on X. We'll be happy to answer questions or post tickers if you wish. And as always, if you want to come join us and see how we use our tools, our Discord, 14-day free trial, all the tools turned on. Great trading community. We continue to grow and expand. It's a member-driven trading community. We had our new web app. We sent out to a significant amount of beta users, our members. Got feedback. We made changes. It is totally member driven. We have a obviously development team, but we take a ton of feedback from what our members want in tool development as well as web app development. And we're moving to our widgetized web app where we'll be able to put a significant amount of more content in there. All of our tools are going to be located in our web app on out in time. So it'll be a one-stop dashboard for all of our stuff. All of our tools we have at Game Edge. So thanks everybody. Have a great day. Manage risk as always, and we'll see you later.